Hey guys, a friend had asked me to look at this company called TORO. Um, let's see. I mean, on face value, I mean everything looks good. It looks awesome. Looks too good to be true, to be honest. The book value per share is $11.58. The cash per share is $7.07. Um, the price to book is 0.45, which means it's more than 50% more than the assets of the company. Price to free cash flow, price to cash, price to sales. Um, Return on assets, return on equity, return on investment, gross margins, operating margins, profit margins. Um, I don't know, guys. Something's fishy with this one to me. When I tried to do a filing search, and for those you may not know, you just go to sec.gov, you go to filings, and you go to company filing search. And let's type in just Coca-Cola or something, just to show you what I'm talking about. Uh, these are the quarterly and the annual reports, the quarterly and annual reports. But when I type that in for Toro, there's nothing here. And what's even more fishy to me is they had just changed their name from Tanko just recently. Um, I don't know where the hell Marshall Allens is. Um, this says the enterprise value is negative 12 million. I don't think this is right because they had huge profits, and the reason why they had huge profits is they just sold some ships. But their profits were up like 1,000% or something crazy. So my concern with this company is that it's fraudulent. Why would the enterprise value be negative 12 million? That's curious to me. And here Yahoo doesn't have any of the cash or anything like that. I mean, this got the earnings per share at $7.44. I don't know, guys. I mean, when I first looked at this thing the other day, and for some reason I can't click on any of these things. Say I'm clicking on this, nothing's happening. I don't know what the fuck. Because I was able to click on this the other day. Let me see. Now, you don't really want to see 52% ownership by retail investors. Um, I mean, maybe you do if you want change to happen, but um, generally speaking, I mean, if it's a good company, if this is your company, you want the ownership in it. You don't want 52% of the ownership to a person that doesn't know what anything about it. I mean, net income 55 million is compared to 5 million in 3 months, and almost 1,000% increase. I mean, to me that would be good news, but they sold all these ships, so that's the reason why the income went up. But look at the cash position. They got, according to this, they got 128 million cash. Um, but then they start talking about a spinoff. Why would a little teeny tiny company that's not even 100 million market cap be spinning off anything? Um, I don't know, guys. Something to me, just my little spidey sense has just kind of gone through the roof. I mean, at face value, this looks like a no-brainer. It looks like a good pick. Like if the market cap's 100 million, they got 128 million in cash. They got more cash than the market cap, so that protects you on the downside, say a quarter of the price. And if they're profitable, you know, this just concerns me right here. Now, like pink sheet stock, stuff like that, you're not going to find stuff. You might find a report from 5 years ago or something, or darks. But this is on the Nasdaq. They have to provide financials, and I don't know why it would not be here. Because obviously they reported something. I don't know if this was audited, unaudited. Um, but I will tell you my sad story is I had um, they purchased at $2.29 per share. But one of these little things like this that just shows an update like this, like I had purchased a penny stock that, if the financials were true, was easily worth. I basically had $8,000 invested, and I thought my investment was worth 100,000 if I was right. And basically, based on what the report said, um, but the company basically went bankrupt or whatever that I had invested in, and I lost my $8,000, unfortunately. But my reasoning was not flawed. I don't believe it was just that the information I was getting was not accurate, and I'm a little biased just because I had picked a shipping company. Around COVID, I told you I had invested in DAC, when it was $3.50, and it ended up going up to $100. Um, and according to this, they still are earning $25 a share, earnings per share. The PE is still very low, and they're paying a dividend. But you know, I had bought down here at 350, and if I would have sold at the peak, I would have made 200 grand, and because I know I had at least 2,000 shares. I said 1,500, but anyway, it would have been between 150 and $200,000 profit. But shipping companies have um, a high cost. I mean, even if a ship is sitting in port, you still have to maintain it. You still got to do repairs and make sure that it's ship worthy, and And when you buy new ships, they're very expensive. Um, the ocean. I mean, if you have a ship and you leave it in the water for 20 years, I mean, you're going to have barnacles on it and all kinds of stuff. So, I mean, ships have to have constant maintenance on them to keep them up. Um, Now, if you're really interested in shipping stuff, there is um, I forgot the name of it, but it's something called like um, the shipping rate or whatever. And during COVID, it had increased like from say $20,000 a ton to 60,000 or 70,000. But with like DAC, I believe they were already booked like years in advance. So like the shipping rates really didn't apply if you're already locked into a particular rate. Um, I mean, this company might be legit. And I have no problem with somebody speculating if this, because I mean, based on this data here, I mean, if the profits went up 1,000%, net income is profit. I mean, the profits went up 1,000%. You would think the stock would move slightly, right? There's probably 10 people that look at this stock, so it's probably not very widely followed. And when I would see good news on DAC, it would actually go down. And um, when I was pumping DAC, I was commenting on it. I was saying how much undervalued it is, and everyone was just leaving hate mail, and the sentiment was, oh, it's a piece of shit, oh, it's garbage, blah blah blah. It ended up turning into a 30xer. Now I'm not now. DAC actually had financials to look at. I could go and look. Now I don't know why I'm not seeing anything on them either. Now, one reason DAC went up, and I'm not sure exactly um, what happened, but I think they had ownership in a very small company that went up massively, and that was one reason they had gone up. But this is what I'm looking for. This kind of stuff that shows me the facts, and it's kind of hard to make a decision when you don't have all the all the information at hand. Now, basically, being based on this thing, I mean, earning $3.34 per share, the stock is trading at $5. So they basically sold some of their older vessels. They bought some new ones. They think gas is going to go up, which they're probably right on. But I mean, based on this report, I mean, the revenues went down slightly, but their income increased 1,000%. Um, if they really have $128 million on hand, you could buy the whole. Say you got $100 million right now, you could buy this whole company for $100 million and take $28 million in cash and put it in your pocket, and you still got $100 million in cash. The market cap's still $100 million. you know. And see, I don't think this is correct either. This $1.42 to 26. Maybe it is, but yeah, this has it at 142 to 26. But the highest this goes is like 13. And this chart only goes back to March 3rd. So I mean, did this company just start, just go public in March? There has not been any public market for our common shares. Accordingly, the market price and trading volume of our common shares may be volatile. Our share price may be highly volatile, and as a result, investors in our common shares could incur substantial loss. Charter higher rates for tanker vessels are volatile. A decrease in charter rates may adversely affect our business, blah, blah, blah. Our board may never declare dividends. We are incorporating the Marshall Islands, which does not have a well-developed body of corporate and case law. Unfortunately, I can't zoom into this thing anymore. But I don't know why I can't find this on the SEC website. It should be there. But I mean, you can look up and see what each of these vessels are worth or guesstimated as. Looks like they were all made in South Korea. The daily rate, $10,000 a day. In 2021, 2022 it was almost $30,000 a day. But where's 2023? We got 2021, we got 2022, we don't have 2023. So as you can imagine, their profits rose substantially, and that the difference in these 2 years. I don't know, guys. I mean, it might be worth a gamble. You know, throw $500 at it, see what happens. Um, what I didn't realize is it went down 14% yesterday in one day. It was Someone told me about this thing, I think on Monday, and it was around $6. And from Monday to Tuesday, it went down 75 cents basically in a single day. And it's gone up a little bit, 3% in after hours. So, I don't know what happens in the short term. A couple weeks ago it was $7, now it's 5. A couple months before it was 2. But I mean, according to their financials, just on the cash position alone, if they got 128 million cash, and the market cap is 100 million, and they're profitable, I mean, that gives you a margin of safety of say 25% on the downside. But if you're losing 15% in a day for no reason at all, what news is there? Why would it go down 15% yesterday? What I don't like is this looks like they're diluting. Um, Issuance of 8,500,000 shares. So, to me that looks like they're diluting, and that's not what you want to see if you're an investor, because let's say you had a 1% ownership in this business. Let's say let's say the market cap was 100 million and you had $1 million invested and you had a 1% ownership. I mean, the shares outstanding was 17 million shares, and they just issued another 8 million. So I mean, and they only sold these shares at $2.29. So they made $20 million off of the shares that they sold. But I mean, if you start out with 18 million shares and they just increased it another 8 million, they almost increased the shares by 50%. So that means your ownership in the company just went down 50%. As opposed to buying back shares, if like a company like Apple or Bank of America, usually they buy back shares every year, and so basically what that happens is your ownership in the company increases without you having to spend another penny. But when you dilute the shares, when you add to the overall pie, let's say there was 9 million shares or something, and they just add another 8 million to it, like they just decreased your ownership 50%. the place where they are incorporated is a little sketch to me. The fact that I can't pull up any recent financial data is sketch to me. This right here looks like it looks amazing. I mean, return on assets 65%, return on equity 72%, return on investment 33%, gross margins of 72%, operating margin of 96%, profit margin of 95%, cash per share $7, book value $11.58. It looks a little too good to be true to me. Something about this, I don't know what it is, but my little spidey antenna has gone up, and something about this does not seem right. Now I'm not saying you can't throw $500 at this and maybe buy 100 shares. Maybe we'll go to $20 and get out. Maybe it goes to $100. I don't know, but if the financials are correct, I think this is a buy. But to me, it looks a little too good to be true. I mean, they just diluted the stock by 50%. Four months ago. Why would you start a new business and automatically dilute the shares 50%? I mean, that might have been why it dropped from 13 down to 1, because they diluted the shares 50%. But without the updated financials, I can't really make an opinion. I don't think, if someone wants to take just these news articles right here and hey, up 1,000% in profit. Yeah, I mean, take a gamble and see what happens, but I don't think there's anything wrong with buying 100 shares at $5 and seeing what happens. Maybe it goes to 10, maybe it goes to 20. The book value really is $11 per share. This and they're profitable. This thing should, and oil prices go up, and all the charter rates go up, and blah blah blah. Like this thing should continue to. At some point in the future, whether that's 1 year, 2 years, 3 years, 4 years down the road, be close to the book value, if not surpass it. But it just seems a little fishy to me. This could be a Ponzi scheme. I don't know. But on paper, I mean, if they got 128 million in cash, the market cap is 94 million. You could buy the company for 94 million, grab the 128 million in cash, and sell the rest of the fleet, and maybe make another 100 million in profit. So, yeah, there's some upside. I just showed you a company that I had the potential to make 30x, and unfortunately, I didn't. I sold at $5, $7, and $9. but it basically went from 350 to 100, and I don't know what the scrap value of the metal on the ships are, but when I bought DAC, it was basically trading at the scrap value. It was 100 million. It was $100 million market cap, but I thought it was worth 2 billion. Um, Now I don't think this company is worth 2 billion, so I don't think the same thing was going to happen here. But and plus DAC had a billion in debt, so that's why I thought it was a 10xer. It had a potential to 10x in the next 5 years. Um, but due to COVID, I wanted to get out of the market as much as I could. Um, I didn't realize they were going to increase the money supply 40%. But yeah, this is one that could be worth it if it's real. Um, but like I said, without updated financials, it's in the too hard pile. And this right here to me looks sketch. It looks almost too good to be true. I mean, if their income went up 1,000%, why is the stock down 15% in one day? It basically went from $6 to $5.25 in a single day, like, and this was new news. This was like a week ago, 2 weeks ago. Why would and maybe that's why it peaked here. Maybe they saw, maybe it was down here. They saw the good news and it popped up to here. But why would it go down so much um, since then? I don't know. Maybe people just saw the good news 2 weeks ago, took a profit, and then immediately sold and got out. But yeah, when I first looked at this, it looked like a slam dunk. It looked like a slam dunk. I mean, net income is profit. 900% increase. I mean, it looks like they're profitable. Just for those 3 months, they earned $3 a share. This is the cash position. And they sold all these ships. That was the reason, this one for 37 million, this one for 34 million. Um, they bought this one for 20. They bought this one for 17. But then they diluted their stock and they got 20 million from that. They diluted their stock basically 50%. Now I don't know if that 17 million shares is before or after this 8 million. I would assume it's after the 8 million. The vessel's revenue, a 1,000 increase. I guess this company is the spinoff. TORO is the spinoff. I don't know who they spun off from though. Um, I don't know, guys. If you think you got the potential for a 10xer, I think it might be worth the risk. Um, you could start a very small position here. I have a feeling that this thing is probably going to go back down to the $2 range, $2 to $3 range, um, and then you can buy it at even a better price. But I mean, maybe you buy 100 shares here. If it drops to 2 or 3, maybe you double down, buy another 100 shares. If it drops to 1, maybe back the truck up. But or just triple down by another, or buy 1,000 shares or whatever. But I just don't know. It also could be fraudulent. Could without accurate. Where do they get this? Where do they get this from? Where is this report? Could maybe try their website. This is a very small company, guy. They only have 6 tankers. When I had bought DAC, they had a fleet of, I don't know, 40 or 50 ships. Um, why would it fall 15% in one day? We entered into a subscription agreement with Paine Corp, a company controlled by our CEO and Chief Executive Officer. No, our Chairman and Chief CEO is Chief Executive Officer. Um, Paine Corp purchased 8 million common shares. So Paine Corp bought 8 million shares. The company agreed to purchase 50,000 shares of Castor for $1,000 each. $40,000 per day. $300,000 per month for these. Oh, here's the 23 numbers. Unaudited though. This is good that they basically got 100% utilization, because if the ships are sitting idle, they're not making any money. Now, I mean, this right here looks really good. They got 250 million in assets and only 14 million in liabilities. $115 million. If you take 115 divided by 17.5 equals $6.57. So to me, the because there was, I think, 17.5 million shares outstanding. So the stockholder equity should be around $6.50, maybe higher. Here's the 2022 annual report. We just saw these three right here can make $300,000 a month. So here's the ticker of the parent company, CTRM. This one is market cap's 40 million, and it's a penny stock. It's trading at 40 cents. Earnings have declined over 3 years, contributing to shareholders' 53% loss. There's going to be a 10 to 1 reverse split. How can the Nasdaq allow such an obvious scam to continue defrauding investors? It's totally mind-blowing to me. This is bad news, guys. This is like times that I like to invest in things like this when every comment is negative and there's no positive. But you saw it up there that this could be a potential scam here. This guy's 85% down. I'm a sophisticated investor. I always watch YouTube analysis created by sophisticated video game teens before I make investment decisions. Okay, Boomer, you're just an old fart parasite. We know your kind too well. Let me guess, you got plenty of exemptions and deferment for the Vietnam War. Vietnam times were good. Who knows? You may be my son, Anton. Oh, that's funny. Market cap of 52 million is mind-blowing value trap. 38 million in cash on hand. The assets alone are over 150 million. More share dilution. Yeah, I don't know, guys. I think I would stay away. I'm pretty much 1 for 1 on shipping companies. I got a 30xer out of it. Of course, I didn't make 30x, but I could have if I would have held. But this is the parent company, and then this is the spinoff. but the parent company is half the market size of the parent company. And this looks pretty abysmal. Now, when I bought DAC, it had a similar chart where it was probably the worst company that you could have bought in the last 5 years. And um, so I don't know, could be a value trap. It could be some value here. I don't know. Um, when I bought DAC, I put 50% of my portfolio in it. That's how sure I was. This one I can't say the same. But they're going to do a 10-to-1 reverse split, which means this goes to say $4. For every 10 shares, you have one share. And just see what happens. Maybe it goes from 10 back down to 1. If it goes to say 10 back down to 1, this might be attractive there. I don't know. Anyway, you guys got to make your own decision on this one. I can't. Um, it just seems fishy to me, is all, and for that reason alone, I might be right, I might be wrong, but for that reason, I'm skeptical. Anyway, thanks for watching.